Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news an air of optimism is returning to financial markets. But first, this morning's dairy auction was nowhere near as weak as some had expected. Prices were down 4.7%, led by whole milk powder, which was down 6.2%, and skim milk powder down 4.2%. But the exchange rate came to the rescue, and its recent devaluation means that overall prices were down only 2.8% in New Zealand dollar terms. And there were bright spots. One is that volumes were much lighter because this is the back end of the season, and another was that cheddar cheese actually rose 6% from the prior auction, taking it to its highest price since April 2014. Current shipments to China might be a real stress point, but collapsing prices aren't a crisis worry. American data wasn't so negative either. Factory orders rose in December, up 1.8% after falling 1.2% in November. But the December level was virtually unchanged from the same month a year ago, and in calendar 2019, it was lower than calendar 2018. Tariffs haven't helped US factories at all. And in China, there are no signs yet that the virus emergency is easing. Their central bank pumped almost $90 billion into their banking system with reverse repurchase agreements, the largest single-day addition in more than a year. And it set their currency rate at almost 7 to the US dollar, easing exporters' burdens. The growth in the number of confirmed cases is still rising, but at a slower rate, and the growth in the number of deaths reported is slowing. The human and economic toll in China will be huge. And equity markets turned very positive in Europe overnight, with most markets up 1.8%. Wall Street is also rebounding today, with the S&P 500 up nearly 1.7% in midday trade. This follows Shanghai and Hong Kong, which were both up 1.3% yesterday at the end of their trading sessions. And the enthusiasm in Hong Kong is after a year of widespread local trouble, with the coronavirus the latest setback. In fact, Hong Kong was in recession in all of 2019. And in Australia, their central bank left its policy rate settings unchanged, convinced the country can ride out the trade and climate pressures in the longer run. Its implication is that 2019 normals will return fairly soon. The US Treasury 10-year yield will start today at just on 1.60%, and that's a strong 7 basis point recovery in a day. And gold has retreated sharply, down $27 to $1,552 an ounce, as risk perceptions ease further. US oil prices are holding at just on $50.50 a barrel. The Brent benchmark is also holding at just under $55 a barrel. And the Kiwi dollar is little changed this morning at 64.8 US cents. On the cross rates, however, we're lower by half a cent to 96.2 Australian cents. And against the euro, we're firmish at 58.7 euro cents. That puts the net of these shifts for our trade-weighted index at just on 70.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.